This is Robert with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute today, Friday, December the 18th, 2020. And what another exciting day and exciting week we've had watching the futures market. I know y'all hear me say that every week, but this is another week that's backing that up. Let's take a look at how futures closed today in Chicago. March corn up 14 cents for the week, $4.37 a bushel. January beans up 60 cents a bushel this week to close at $12.20. This is yesterday was the first close for a soybean futures contract above $12 since early 2014. So again, January beans up 60 cents a bushel this week to close at $12.20, and your new crop July 21 wheat down 4 cents for the week to close at $6.03. When you think about soybeans this week, we had a lot of influences. We have two unions, the best that I see, two unions that represent workers in Argentina at their soy crush plants. We know that Argentina is the world's largest exporter of soybean meal, and when those crush plants are shut down because of a worker strike, it gets the whole world, the whole oilseed industry around the world excited and interested, and boy did it cause buying this week. And then yesterday we had Malaysian palm oil, the top competitor for soy oil around the world, rally to a 10-year high on the futures market, and that pulled up soybean oil, and then that pulled up raw soybeans or soybean futures. So it was a remarkable chain of events for beans this week, where we saw a quiet trade Sunday night, Monday, and Tuesday, but then as the news worked its way through the industry about the strike at the crush plants in Argentina and then this Malaysian palm oil rally, it really got the speculator who is long soybeans just wanting to buy. I had one broker tell me this week from a technical perspective, there's no top on where soybean futures could rally. Now that's very different from a fundamental perspective, but it really gets excitement into the veins of the speculators, who a lot of them trade on technical indicators as much, if not more, as fundamental, to see the soybean futures close above $12 and see some of those technical indicators say we don't know where the top is now. When you look at soybeans with a stocks-to-use ratio around 4%, persistent dryness in South America, and just a lot of unknowns around COVID and the term we hear so much, COVID food insecurity, it does make sense that those influences this week got us 60 cents a bushel in beans. When we shift gears and think about the Chicago soft wheat contract, a lot of volatility this week. We closed down 4 cents for the week, but we had back-to-back days where we were up 18 and then down 18 cents. We got news from Russia's ag ministry that due to high domestic prices for wheat, they were going to put on and plan to put on a large export tax on their own wheat. That hit the futures market and caused speculators to want to buy. And coming into the week, the managed money funds were short wheat for the first time in a long time, but that caused them to want to buy, and then word got out that export tax wouldn't go on until the middle of February, and then some rumors that it might not go on at all got the trade calmed back down, and we ended up closing down 4 for the week. We had an excellent export sales report this week for corn, and that was another reason we saw corn up 14 for the week. Some positive technicals there and positive fundamentals as well. So when we think about the EIA report that we received this week, the ethanol report, we see that 99.7 million bushels of corn were ground for ethanol. When you look at the 5-year average, we should be grinding 108 million bushels a week. So we're, what is that, about 5% off of where we were before COVID. We need that domestic demand for ethanol, but I think one way of looking at those numbers is that's pretty positive that we've recovered this much since April. Thinking about that too, this week we saw the November oilseed crush report this week, and it was the largest November crush number on record. 181 million bushels of soybeans crushed here in the United States. It's 181 million bushels in November. That was a record for bushels crushed, and it's amazing to know that we have that kind of capacity. And the people at those crush plants here in the United States, including the one in Chesapeake, Virginia, that can get a lot of bushels crushed. So thinking about those things, those are all positive influences to price there with the crush report as in reference to soybeans. And we're not seeing yet the price of soybean on the futures board rationing the use of beans. At some point, we know from history we're going to get to that point. If the price goes so high, we'll see people who use whatever that commodity is find a way to use less of it. We're not seeing that yet in soybeans. We came into the week with some rain over the past weekend in Brazil. We had a wet week across much of the ag growing regions, that big region in Brazil. But we did have rain as well in the forecast for Argentina today. Next week, it looks like more of a dry week in Brazil. We're going to be watching the weather down there. We did see the Dow trade, the futures index trade over 30,000 this week for multiple days. We've got the dollar futures below 90. We're down at a 3-year low, and we know that's incentivizing the sale of our commodities. And we see crude oil just continuing to work its way back up. Around $48 a barrel, and I went back and looked, and remember when we were talking here in this chair in April, we were down at $26 a barrel. So first vaccines went out this week. That's an outside influence that's definitely driving the equity markets higher and getting optimism in the economies all over. We did get word from China's ag ministry that they feel like 90% of their hog herd is back after African swine fever. So that's a positive development as well. So the biggest question I got this week from you all was options, concerning options. If you have questions about re-owning cash bushels that you've already sold and you want to talk about options, give us a call next week. This is Robert at Virginia Farm Bureau's Grain Division.